Hello, I'm Lelda Smits for the Finance News Network, and joining me from Ausbil's Australian Active Equity Fund is Director of Equities, John Grace. John, welcome back to FNN.
Hi Lelda, nice to be back.
Wonderful. Now, the RBA has recently cut rates to a new record low in February. How has the fund positioned itself for a low rate environment, and how is the fund performing?
Yeah, the fund's reasonably well positioned for lower interest rates, but not aggressively so. The fund will benefit from strong positions in construction and also lots of offshore earners in our portfolio. The market's up about 12% so far this calendar year, so a strong run. And Ausbil is slightly behind benchmark, but not too much. And we look forward to a better period as the Aussie dollar starts to come back as a result of low interest rates.
Okay, now the rate cut boosted the S&P ASX 200 index to near 6,000. Which stocks have performed the best for you this year?
We've had a number of stocks that have done particularly well so far this year. Macquarie Group, which had a strong earnings upgrade during the period, is up about 34%. Global medical distributor ResMed's up about 33%. And Aristocrat Leisure, a strong performer as well, is up about 21%. In addition, we've had housing construction as a favoured tilt in the portfolio, and Boral's been performing strongly and up over 20% during this period as well.
Okay, John. Now, the big four banks remain strong with CBA trading above $90. How much higher do you think we're likely to see the big banks trade?
It's a good question. The earnings continue to be robust for the banks. Low interest rates are definitely helping their business, and there's lots of credit growth coming through in both residential and commercial. As a result, we're seeing earnings upgrades to these banks, and with a strong dividend payout ratio, they've been well supported. The fund is overweight the banking sector.
Okay, many mining and energy stocks, however, have just fallen out of the benchmark index. What is your exposure to these sectors now?
We do hold both sectors, but we are underweight relative to benchmark. We do see commodity prices remaining under pressure, and therefore earnings for both of those sectors will be subject to downgrades and earnings hard to come by. The big companies are very focused on cost out, which is also lowering cost curves, and therefore we don't see any earnings upgrades for quite a while.
So finally, John, with low rates and a falling Australian dollar, which sectors or stocks are looking appealing to you?
Yeah, two key thematics running through the portfolio. Firstly, offshore earners and global stocks, which are benefiting from an improving global economy, such as Brambles and Amcor, are performing well for the portfolio. And in addition, in the domestics with lower interest rates, we do favour the banking sector and have an overweight position there.
Excellent. Well, John Grace, thank you for the update from Ausbil's Australian Active Equity Fund.
Thank you, Lelda.